This
And we will
conference will
talk
now
about
be
what happened.
recorded.
All right, as always, everything we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. All right, so let's talk about a few things here. All right, number one we're going to be talking about is Apple. So I understand, and I think this is a big problem. And the first thing that I do want to I want to put out there is that I don't care if you take my classes or if whatever any person that, obviously that I care that you take classes that are going to help you learn how to trade. But trying to learn how to trade in the chat room, it's not enough. Okay, it just is not whatsoever going to be enough for you to be in there and try to ask questions as you see things moving. Now, you can be taught as things are moving, but it's impossible. It's impossible to answer every single question, and there's so many other variables that go into these things besides just pull-ups and pull-downs. We have volume. There's hundreds of variables that we see coming into here, and I think one of the things that a lot of people get caught up in is pull-ups and pull-downs. Because a pull-up and pull-down, I'm going to say this again, it has nothing to do with following a market maker. What you're doing is you're following a direction of the stock moving for the market maker itself. So if market maker comes into huge prints, we get that pull-up, but they're not making money yet. So you're not following them. One of the things that we know is that in Apple, okay, at 165, okay, where do they have to make their money? By far, where does the money have to be made in Apple? Short, right? What was our price target? This was one hell of a day. It hit our price target that we've been waiting for it to come down to 160. You're talking about one from 167.50 to 160. That's a $7.50 move that did exactly what we were expecting it to do. Remember what we talked about with these positions being built. So if your percent, I'm going to say this again, and I'm probably, I'm going to say this is the last time I'm going to say it, and we all know that it's not going to be the last time that I say it. But what happens is, if your percentages aren't where they should be, you should not be trying to trade pull-ups. And we talked about, I know Natasha had put this out there before, at 167.50, if you take your position and it starts going up, guess what? Take another one at 170. Because there was no way in the world, based off the amount of selling that we had, the stock wasn't going to 160. I mean, it was a short. 99%, this was a short that we're going to be looking for it to go down overall. That's where the market maker was going to make their money. And that's exactly what we saw happen. Now, does that mean that I didn't expect it to pull up a little bit more than it did? Of course I did. But guess what? Those prints that are sitting there, I'm not long-term trading. I'm day trading. So when we get a beautiful trigger, so not only did we get this beautiful move down, but then one thing that you want to look at is right here, okay? We have our print line that we came in. All right, and it sat there and it held it right underneath 165.50. Guys, let me ask you something. When we get a trigger that does not push into a major level, what's the play? What do we do with it? What do we do with a play when it goes up? I mean, it couldn't have been any easier, to be completely honest with you. This is one of the easiest trades that you have, but we know pushing into that 160, into that print line, it did not hit it, and then we got a trigger back down and made for an even better trade. I mean, we know that's where it had to go. So we ended up pulling underneath. We do have some beautiful selling sitting at that 160. Click the button. I mean, that's the best way to go about it. But it was phenomenal, absolutely beautiful trade. It made for an absolutely phenomenal day. Now you guys can go read all the profanity in the chat room on all of those. All of the charts. I don't know. I guess people are getting upset. I must have missed everything here, so I'm not really sure what was going on there. But they certainly, I mean, Facebook is just getting absolutely hammered. And you know what? When you have a lawsuit, first of all, if I ever got a lawsuit that said from Washington D.C., I'm pretty sure I would. Guys wouldn't see. I'd be in the Bahamas somewhere, because that is not a good sign. And you can see, I mean, look at the volume, 56 million shares. When a stock trades this far above an average, and I just want you to understand this, and this is another variable that comes into things, but when a stock trades that far above where its average volume is, do you guys think it's going to act as an exception, or is it going to follow the rules? What do you guys think? And I know it might sound like common sense, but some of us, for some reason, forget this sometime. Oh, hell yeah, it's going to be an exception. And that's exactly what we saw. And it wasn't even, when I say exception, I mean, it's going to move way more than we were looking for, but it followed the rules perfectly. I know the chart, I mean, it literally stair step up and boom. Ended up getting a beautiful trigger to the bottom side, even if, as we were moving down that first time, really didn't get that great of that great of prints, but as it started pulling back up, we saw those prints that came in, and it just, I mean, it was not a hard trade to end up taking. Now, it wasn't a great one either because, as everything else was out there moving, and we saw, that ton of selling starting to come into everything. It was probably one of the worst actual trading stocks that we did see going on out there. It just was not a ton that was really going on. How do we know if we should stay in? I took from 144 to 140, but I mean $9 on the table. Well, it's based off of new selling coming in. So if we have new selling, remember when a stock is trading that much volume, what's the time frame in which a pull up and an actual move is going to happen? And that's where these variables come into understanding how to trade. All right. Okay. So we have to understand something is that these pull ups and when we have that much volume, okay, it's going to happen very, very quickly. And that much volume coming in. Remember, a stock like Facebook, if we look over here and you actually look at the range itself, it trades $4.67. It trade double that today, right? Over, 26, so a little bit less than double its volume. So we could basically double what the range is. So let's just make it easy, $9 move, right? So from a $9 move, if you make $9 on 1241, perfectly fine in that. All right, so it overall, you want to use the variables that come in to give you an idea of exactly what you're going to be looking for. Volume is one of the number one variables that you're going to have to put into almost every single trade that you have out there. So right now, based off of everything that we saw, we know we have a ton of selling everywhere. I'm not making any decisions whatsoever. I'm not giving any opinions because I'm not going to do a thing until I see what happens when the market opens tomorrow. I'm going to look for new prints and I'm going to build a story on what they're going to be doing because as of right this second, it's all the same. Okay, it's all exceptions based off the Fed meeting that came out. So I'm going to base every decision that I'm going to be making for the rest of the new year on what I see tomorrow after what just happened today. What stops a sell-off in terms of looking at prints and volume? Well, first of all, you're going to have to start to see a bunch of buying and lack of new selling. You're always going to get selling, you're always going to get buying, but it's finding someone that comes into it big. For instance, at 160, we didn't get crazy big prints. It's not like what we had at 165, where 165 hit the stock so many different times. Also, another thing that we have to look at as well that I know a lot of people aren't putting into this because once again, it's not just as simple as looking for a pull up and then the stock moving. There's so many other things that go into it. But if a stock keeps hitting a level and we keep getting selling and selling and selling and selling over and over and over again, and it keeps coming up from that, what's going to happen to the buyers at that level? The more times a stock comes to a level and comes back up, even with new selling, what's going to happen to the buyers? Exhausted probably for trying to keep the stock back up. Well, they're going to run out. It's not they're going to leave because if they're buyers, that means that they actually bought, but they're going to run out. There's not going to be any more buyers anymore. So if something keeps hitting a level over and over again, eventually, guys, there's not going to be anybody left because the sellers are going to beat the buyers. They're going to win out over the buyers. And guess what? It's just going to be like, think about a boxing match. And the guy just keeps getting up and keeps getting up. Eventually, guys, he's not going to get up anymore. He's just going to hit. That's it. There's just they've got no more energy left. There's just nothing left for them to do. How many times did we hit 165? So that's another thing that you have to think about when we come into these things. How many times is it actually hitting? So when we hit it a bunch of times, when it doesn't really move up much first, what that means is we're going to end up getting a bigger pull-up. But if it makes a big pull-up and then it hits it again, makes a big pull-up and then it hits it again, what's going to happen is the buyers are just not going to go in anymore because there's no reason for them to. At that point, they're going to give up and they're going to join the sellers and they're going to end up making money towards that downside. So just a lot of different things that go into, when you're just looking at a stock. I know it looks like a chart. I know you see prints, but there's so much more that goes into this stuff. So tomorrow should definitely be an interesting day. Any other questions? Even though we came off of news, we can say some of the selling is satisfied, right? Or does the market maker have to make more? So right now, the price target was 160. We got some selling that came, for instance, in Apple, we got some more selling that came in at that 160 level, but that's not enough for me to say 155 by any means. The amount of selling that we got there, I'm putting $1 onto it. Nice little pull up from there, and we should be able to get to 159. But remember, 160 is a psychological level, so it's going to have a hard time going underneath there. What I want to see and where I'll make a decision is when we see something huge come in, something really big like what we saw at 165. So not only did we see huge prints that came in at 165, but we also saw hit it over and over again. So we know somebody built up a gigantic position there. So that within itself could tell us somewhere in the 157.50 range. But guess what? If it's going to move to 157.50 or to 155, do you think we're going to need to see new selling? Could you say like a day like today in terms of placing orders is predetermined with the Fed talk, and the sell was secretly planned throughout the day? Well, see, the thing is, it wasn't secretly planned at all, guys. What have we been seeing over and over again in pretty much all of our stocks in the past 3 weeks, guys? Have we? What have I been saying is going to happen to the market? What have we been seeing over and over again? It's all been selling, so they haven't been hiding a thing. Now, did I think this was going to be the overall move? I still don't think so. I still in no way whatsoever think that this is it. It's not it. It's not even enough for, from the amount of time that we've been seeing coming into there. But this was a catalyst that gave us great moves towards where that was coming. So they've been setting this up for weeks. This is not shocking for all these stocks to start crumbling. We've been waiting for this. Everyone should be ecstatic today. We've been waiting for a gigantic move, a big move to come down, and these stocks to really get hammered. So this is perfect. This is what we were waiting for, like I said, to happen over the past few weeks. Could you say no, there's no such thing as insider trading. All right, guys, any questions? I'll put the recording up. But remember, there's a lot more that goes into this, and this is exactly what, of course, can we talk about levels in the morning? You see, you know what? I am that happy about the meltdown because I've been waiting for it. We've all been waiting for this. So how could I not be happy when I finally get gigantic moves for trading? I mean, I don't know about you, but at the end of the day, when everything finally comes into place and we get that view, when you could trade 4 stocks and just click short and just literally close your eyes, I couldn't be more happier than I am right now. We've been missing a good level description. The goal is to get as excited as Rich sounds about the next meltdown. Oh, I'm going to tell you, I'm going to keep saying the same things over and over again. Now, guess what? If tomorrow, for the next 3 weeks, we see all buying, we're going to get a great move back to the upside. I just don't see it yet. But when you know something has to happen, and then it happens, and you're actually able to make money on it, what else could be better? That's what we trade for, guys, is we trade for these gigantic moves. I mean, it doesn't get any better than that. All right, guys, so I will talk to everyone. Everyone have a wonderful night, and I'll talk to you all bright and early.